Market news now. Most Asian equity markets edged higher while the US dollar hung near its weakest level since May, with investors fretting about the risks of a global recession as the Federal Reserve presses on with interest rate increases. Locally, the rand was on the back foot and sat for a weekly loss against the US dollar, as crippling power cuts continue to heighten economic uncertainty. We also have property group Fortress, which has lost its status as a real estate investment trust after losing an appeal against the JSE's decision as it battled for months to win the approval of shareholders to collapse its dual share structure. The change will take effect in February, but Fortress will remain a listed company with the existing share structure. As a result of no longer being classified as a REIT, Fortress and its subsidiaries are no longer entitled to deduct dividends paid to shareholders in determining its taxable income. Joining us to unpack the latest when it comes to the markets and also look back at the week that was, we are joined by Warwick Lucas, who is the head of Galileo Securities. Warwick, thank you so much for your time. I mean, your sense of the market sentiment right now, given the fact that when we started the year, there was a lot of optimism around the China reopening and possible slowing down of Fed rate policy hikes. And now it seems to, suggest that things have kind of changed. What do you make of the change that we've seen, at least over the past few weeks?
Okay, so I think that you're absolutely right to refer to a very positive start for 2023. And it sure has fizzled out, certainly on the S&P 500 this week. And I think the JSE itself was really very, very patchy. I think quite a few factors obviously coming through there. There's still the question of whether or not recessions are going to come through. Is there going to be any new news on the Russia-Ukraine war? So yeah, I mean a lot of spoiler type news out there. And of course the big question for the year ahead in markets will be, what does inflation continue to do?
When it comes to the key themes that dominated the week, what stood out for you?
Okay, so there were a couple of biggies. One was a shakedown on MTN by Ghana. It seems that they continue to be haunted by some geographical elements and where they operate. It's also notable to see SA civil society really finding its backbone properly and laying siege to Eskom and the responsible ministries. But for me, the really, really big one that was relatively quiet was the announcement the Chinese population growth has come to an end and in fact is going to start declining in the next few years. And keep a watch on that, because that's really going to be a very, very big structural theme in the next few years.
Earlier this morning, we had a trading update from Mr. Price, and depending on who you follow on social media, some were quite disappointed with the trading update if you take the acquisitions out. What did you make of the numbers?
Okay, so it was certainly a very tough operating environment, clearly. Now, the apparel area, excluding acquisitions, up only 2% in turnover. The home segment down 3.5%, and overall like-for-like sales, which is same store for same store, was down 3.9%. So that really is a very subdued environment, and certainly management commentary was very subdued. But of course, as we know, load shedding featured very large, and it does make for a tough environment for these kind of retailers.
Looking at the data that we've gotten so far coming out of the U.S., what are your expectations for the U.S. Federal Reserve when they meet at the end of the month?
Okay, so you've got a twin pressure here. I mean, the inflation numbers in the U.S. are obviously concerningly high but falling, and interest rates are continuing to rise off an extremely low base. And the question is, well, when does one overtake the other? So inflation is doing quite a lot of rolling over. You look at things like oil prices, energy prices, food prices, but there are other factors such as money printing, deglobalization, full employment that continue to aggravate inflation. So I think at this stage, the Fed is probably going to stay on a hiking footing, but to a large degree, I think they've started to win here. I do think inflation, while still high, is rolling over. we'll probably see some rate hikes, but I also think they won't be shy to actually turn track when it becomes clear as to just how much they have actually managed to rein things in.
As we wrap up, your expectations for this year's earnings season?
I think judged by looking at a nowcasting service called GDP Now from the Atlanta Fed actually suggests that quarter four 2022 actually likely to show some very strong GDP growth, which we'll probably see come through in earnings, probably bigger than expected. But I think also we'll probably start seeing some quite some more precautionary management commentary coming through, and perhaps that could make for a bit of volatility.
Warwick, let's leave it there. Thank you so much for your time. That is Warwick Lucas from Galileo Securities. And next week, we do have Microsoft earnings on Tuesday. But on Monday, we have the Bank of Japan releasing their interest rate minutes, rather the minutes for that meeting, as well as a speech from the ECB president. That is it from me. We're going to take a quick break and we'll have more news for you, so stay tuned.